you ready? Are you ready? Are you ready? Let's go.
Welcome to Unpacking the Home Advantage. My podcast is to help you understand the mortgage loan side through my experience and knowledge. My name is Paige Ashby. Today I'm going to share with you the 4 core lending components before buying. Let's get unpacking. All right, there are 4 core components to understand before buying a home. It's capacity, capital, collateral, and credit. Number 1, the capacity. The capacity to pay back the loan. Where is the source coming from? Which also includes your debts that you have, so your debt ratio is in line with the lender's requirement. Now, each program, for example, conventional, FHA, VA, USDA, those have different requirements for debt ratio. The government ones like FHA, VA, and USDA does allow you to go higher on the debt ratio, which means it allows you to borrow a little bit more because it gives you a little bit more leeway on a higher debt ratio. Now, income, the capacity. Income means what are you using to qualify for the loan? And it's not just pay stubs, W-2s, or tax returns for self-employed borrowers, but it also includes fixed income, child support income, alimony income. I do have a podcast on income type, so you should check it out. It'll go in more details and all the income that you can use to qualify for a home. Number 2, capital. Many of you guys are saying, what are you talking about, Paige? So what I'm saying is show me the money. I need proof of reserves for your down payment. Reserves can come from any account that can be liquid. Liquid means you can pull the cash out freely. Allowable source can be from a 401k, CDs, stocks, or bonds, and of course checking and savings. Now, in regards to checking and savings, we have to source all the funds, okay? So if you have larger deposits, we gotta clarify where it's from. Cash deposits cannot be used as source of income because we can't paper trail it. It's all about money laundering in the lending world. So anytime you have a large deposit that's cash, we won't be able to use it. If it's mattress money, same thing. You're saving up, you need to deposit that in, and it has to sit there for 2 months. It's called source of funds for 2 months. When you hear that term, it means if you do have any large deposits, you need to get it in the bank and let it sit there for 2 months. Then we'll be able to use it. Okay, so the other allowable source are grants. Now, a lot of counties in your state have grants for you, which helps you to buy the home for down payment. Gift funds is also allowable, meaning it can be gifted from your employer, it can be gifted from family members. We do have to source it, so we have to show where the gift is coming from, and it's pretty simple. Basically, the lender, the loan officer will have a gift letter for you to fill out, and then they also require your donor to attach where the gift is coming from. So if it's from a bank account, we need the full statement of that bank account. The other allowable source is a great source. It's a down payment assistant. Most people don't realize that there's a couple of down payment assistant programs that's out there. One is that you don't have to pay it back, and the other one is forgivable. So it depends on what program your loan officer offers. I do a lot of the Genoa, which is it's forgivable, but it's also done through the lender and not through HUD. So those are great because it flows a little bit easier. I have more control of getting updates because it's through my lender that I'm taking my client's loan to. So it's basically underwritten at the same time when you submit the loan. So the lender takes care of that down payment assistance side when I do those Genoa programs. So those are great source. If you have, any questions or you want to know more about it, definitely connect with me and I can give you the options there. So the last component is credit. Credit is not just your credit score. That is one factor that is important, but it's not just your credit score, it's your credit history. We want to see that you're responsible and have records of paying your bills on time. And other debts acquired has to be in good condition. So showing that the history of making your payment on time, showing the history of how much credit you have open, meaning how many credit cards you have that you are paying off on time, and the amount of time that you have. So usually we like to see 3 open credits on your credit report, to get your credit score up. That will help tremendously. And then also we like to look at if there's any bankruptcy history. So there's bankruptcy 7, Chapter 7, Chapter 11, and 13. Those definitely will come in play with how you qualify for the loan. There's different guidelines depending on what program. So don't think just because you have a bankruptcy, you're completely out of the picture of getting a house. That is not true. I have programs that you can be in a bankruptcy less than 2 years. So don't feel like that's out of the picture. Just consult with your loan officer and see what all your options are, because there's situations that you have to do that. So we understand, but that's why there's programs out there that allows bankruptcy. Government loans are very understanding when it comes to bad credit history. I'm not saying bad credit, but bad credit history. So if it's due to some life events or uncontrollable circumstances like divorce, health issues, we definitely are very compassionate with those medical life events, or due to a death in the family or anything like that, due to your mortgage lates or any bad credit history that you have. So let us, the loan officer, review your credit and see what options you have. And if you can't buy a house right away, at least what I do for my clients is I give them a plan, some steps on what we can do, and goals to see if you can buy a house in 3 months, in 6 months, in 9 months. What can you do? Because as a consumer, you don't know which debt to pay off or how you can better your credit, and you're just wasting your time trying to do it on your own. So you definitely should consult with a loan officer and get a game plan if you feel like you are not ready to buy now. But if you have a game plan with a professional mortgage loan officer, then at least you are on the right track of trying to get pre-approved when you are ready. So if you have enjoyed this information, make sure you give me a follow. And if you have anyone that may benefit from this, please share. More episodes to come. As an active mortgage broker and a mentor, if you have any questions, you can reach out to me through LinkedIn. Paige Ashby Lending. Thanks for being part of Unpacking the Home Advantage.